I use. My layout files are available from the site to download. So basically you can download all my charts, put them on your system without any trouble at all. There's also, for those that don't have Ensign eSignal, there's a textual representation. Anyway, the reason I look at crosspairs, and I have done for a number of years, is because they are hugely under-analyzed. I mean, people are all looking at dollar yen, dollar Aussie, that kind of thing, and these things just go under the radar a little bit, and anybody with a wee bit of experience in the markets knows that probably isn't too bad a thing. And the other thing about it is the moves that we see in these pairs are very, very greatly amplified. And that's really one of the reasons that I've got the CAD Swissy weekly up here ahead of you. I just want to just run through it very, very briefly. The high that we've got back here in 2007, 125. The low that we've got down here, 71 in 2011. I mean, that is a massive, massive movement. The crosspair service, it's been running for about a year, and in that time we've been watching the move down from this sliding parallel, this area, 2013, around about May time. We were watching that at 95. We saw it come all the way down to here to 78. I mean, that is, again, 1,700 odd points. That's a pretty considerable move for the CAD Swissy. Just before we leave this chart, and we will come back to the CAD Swiss in a little bit more detail, a smaller chart a little bit later on. What I just want to note, if you're not familiar with the analysis we use, is just how very accurately, really, we're following price. From this sliding parallel up here, the resistance, the lowered resistance here, down we go. We found support along this sliding parallel that comes from that low there, and we've had a little bounce. Just also, another thing we use is the ABCD, AB equals CD, and we've had a little bit of a bounce off the P. Just want to keep, maybe keep that in mind when we go and have a look at some of the other slightly more detailed charts a little bit later on. I'm going to go from there to another chart that we look at, another weekly chart, again just to show you the kind of thing we're doing. This again is the Kiwi CAD, and what I think this chart shows, basically going from 2009, we've got a low of 61, we've got a high up here of 96, so almost a 50% increase in price in 5 or 6 years. That's really a huge move. But what we're able to do is very, very simply, without the need for RSI, MACD, fibs, anything like that, purely using simple support, resistance, looking at the change of trend, we're tracking price, we're looking to follow price, and hopefully to be able to take advantage of some of these really quite considerable moves. For example, let's just look at this sliding parallel that we've got here. I'm going to highlight it. There we go. That one there, touch there in 2011. We start moving up. Just going to change that back. We step up a little bit here, slightly higher support. Touch there, up we go again. And that is the kind of thing that we're looking at. We're looking for changes of support. Instead of the support being at this lower sliding parallel, it's slightly higher. That tells us price is likely to move up. When it does move up, look where we went to. Sliding parallel resistance from that high, pretty exact touch there. We've now fallen back. What we're currently looking at is a line of resistance, which is this Puce line, and how that is becoming support. And we're going to look to see if that, in fact, is a bullish signal, and price is going to start moving to the upside from that. What I'm going to do, though, just drop down to a daily chart, the Kiwi CAD again, but have a look at this on the daily. Again, really, really simple chart, supports, resistances. We've got a very simple A, B, C. We've got lower parallel support there. We've got a whole load of action along the median line. We start pushing up. And at the moment, I'm just tracking this. I'm tracking the wedge we've got, the sliding parallel support there and there, the resistance we've got coming down from the green line. I mean, in many ways, this is a chart going back to the middle of 2012. It really could not be simpler. We're looking at stepping up of support. We're looking at lowering of resistance. We're trying to follow the path of price, as I was saying. Going to move back to the weekly, and I'm going to look at something else here, Sterling Swissy. And I guess those of you that are members are probably having a bit of a giggle here, because you know I've got a bit of a thing about this. This is a chart going back to 1980. It's not actually using forks here. It's using resistances, action-reaction lines. That's the high that I've taken things off. that's the next price. And all the other puce lines, all the purple lines in this chart really come from that. So if I just go and look at it a little bit more, you can see resistance there, is support here, is support back here in 2011. And what we've been doing, I just want to move in a little bit closer. We've been watching price move up a little bit, just been tracking it with the aid of a pitchfork here. That's really what I wanted to do, just to give a little bit of idea of context. I want to actually home in a bit by going and looking at the sterling Swissy on a daily basis. And this is the chart that I'm looking at here. And what I wanted to show this, the reason I wanted to show this was to stress once again that the important thing is not so much the path of price. I'm sorry, it is the path of price rather than the fork itself. And again, if we look at the fork that was drawn, we've got distinct A, the B, the C. You've got median line resistance there. You've got lower parallel support here. We move up, we find support. We find resistance along this sliding parallel, once, twice, 3, 4 times. Again, the support here at the lower parallel, we fall underneath it, resistance there, and down we move. But the important thing is that we don't immediately get rid of the fork. Once the lower parallel is breached, we don't get rid of that, because we're pretty confident that what we're doing is we're following the path of price. There goes those 3 words again. I'm sorry to sound boring. And look what's happened from then on in. We've got sliding parallel support down here. We're still finding support in the angle of the fork. We start moving up again. We start moving up again. We move above this horizontal here. Where do we find resistance? The lower parallel. Resistance there. We come back down. We test the horizontal again, and up we go. And the last couple of days, we've just been watching that resistance. Again, the lower parallel there. Previous support back here. It's an important line. And what we're doing by using pitchforks here is we're marking out these lines, these angles that we're watching. We're watching price move in the angle of the fork along the path of price. And again, I'm just going to take it down again because I know not everyone is looking at weekly and daily charts. This is the same pair, the sterling Swissy. This is on a 240-minute chart. It's a different fork. A back here in late December, B, C. You can see the action we've got here along the lower parallel, bounces there. We move up, we find a line of resistance. 1, 2, 3, 4, 5, a whole load of bounces there. That is a line of resistance we're watching. Just going to move in a little bit tighter on this and just try and explain a little bit more of what I mean about strengthening and weakening of price. The support that we saw along the lower parallel, we dipped down here. We dipped down beneath it. We ran a sliding parallel across there. We find slightly lowered support. Instead of the support being at the lower parallel, it's a little bit lower, the sliding parallel there and there. That's a consistent line there. Now what we're also seeing, instead of resistance along this sliding parallel, it's been pretty consistent, it's just dipped down a little bit. Now we're down to this line there. Do you see that? We've got touches there, we've got touches there. That is a lowering of resistance. Just one thing to notice, look at the gap. Look at the gap between the median, the lower parallel here, the dark blue line, and the puce line. That is very similar to the gap between this sliding parallel, the puce sliding parallel, and this lowered one. The fork is, in a sense, moving out of phase. The whole fork is shifting down. The support is shifting down from the lower parallel to the sliding parallel. The resistance is shifting down from this sliding parallel to the slightly lower one. And that is the kind of thing that we're looking to follow. That's the kind of thing that we're looking to identify. Now, I wasn't meaning to have a look at chat, but I'm seeing quite a few things coming through just asking me about actually trading. And what I want to do is go and have a look at a different one, the CAD Swissy. You remember we were talking about this earlier on, we were looking at on the weekly. What I want to do is just go back a little bit in time and really try and explain how we use the supports and the resistances as a means to trade. What I'm doing is I've just taken this back to mid-April, and what had been happening at that point is we've been looking at this downtrend shown by the green line, the resistance, 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 and all of a sudden we start pushing up, we start pushing through the resistance. When that happens, we're beginning to get a bit of a change of trend. going to take the green line out because we don't really need it anymore. We're beginning to get a bit of a change of trend. So what I'm doing, I'm drawing forks the whole time. A, B, C, and I'm looking to see if I get any validation, by which I mean, am I seeing any action along the lines of the fork, just to tell us that what we're doing is we're actually tracking the action, we're actually tracking the path of price pretty well. What do we see here? Well, price moves up, we get a bit of median line support there, we get a touch at the upper parallel, and we fall away. That would be enough, that action and that action at the median line would be enough to get me watching this, to think, okay, maybe we've got the line of the path of price here, we're going to continue to watch it, we're going to see where we can add to it. So what do? Just watch as things move on. We get a bit of resistance here at the median line. Remember, we'd had support there. Okay, I'm continuing to watch this. Continue to watch it. I'm drawing a line here. I'm drawing lines all the time just to see if there's support, if there's resistance. I mean, I guess at the time I would have probably drawn a line across there. I saw support across there, become resistance. Down we go. Just going to get that out of the way for the time being. But what happens? Support here. I'm drawing a line here. I find 3 240-minute bars there, and we move up. Where do we move up to? Median line. I'm getting very, very confident about this fork now. So what I'm going to be doing, when price comes back down, I'm going to be looking to see if there's a place I can get long. Look at this, couple more bars here. The low on the bar is around about 79.50. We start moving up again, we get another touch. Low on the bar here, 79.60. Tells me you could get it along there, 79.60. You could get a 10-point stop, 79.50, and look to see what happens. We get one more bar down, 79.85. If you'd missed these, you could get in there, 79.85. A stop, 20-point stop, 79.65. Where do we go? We push up again. Where do we run this resistance? Sliding parallel here and here that we've previously marked. This is the fork that we're actively following. We're actively following this through May. We're still following it. We're looking at resistance. We're looking to see if support is stepping up or stepping down. Pushed up, kind of regained the median line here. Remember, it was resistance back here, support back there. It's an old friend of ours. We know about it. We continue to find support across here. Now, price started falling quite heavily. What I also did was I drew a horizontal from that spike high. Let me just get that in the right position. Change that to a green horizontal from that spike high. What we were talking about, when price hit the sliding parallel, there were a couple of areas we were going to look for support as we came back down. One was going to be the median line. Second was going to be the horizontal. Resistance, resistance, was support there. It was support back here once more, 81.60. Up we go again. Again, we come back down, we find support, median line. We've pushed back up. We're up at the same line of resistance. Look how many touches. 1, 2, little spike above there. 3, 4, 5, 6, 7, 8, 9, 12 bars. What happens? We come back down again. This is where we are now. This is where we currently are. What you can see is we've got a stepping up in support from this Puce sliding parallel back here, which goes back to March. All that support there. We step up a little bit to the median line. We had a bit of a pop down. We found support at the quartile. We found support at the horizontal. Up we go once more. Median line again. And what we've been watching the last few weeks is potential stepping up of support again. We move from here to the median line, potentially to this green sliding parallel now. This was something that I signaled in this morning's analysis, I think. We did have a little bit of a pop above the sliding parallel, the resistance, the Puce resistance there. We've fallen back down from it. The retracement, the two areas I was looking for, potential support at the quartile, didn't quite happen. Next one we're looking at is this sliding parallel here. If that failed, what I'd be looking at is to see if we get a little bit more support, just a little bit lower, across those lows there. That is currently what we're looking at. So I can see a few people have said, how would you actually trade this? Well, you know, that is the way. But what I want to point out is what we are providing is an analysis service. This is not a trading service. I don't sit there and say, buy now or sell now. What I'm doing is I'm presenting a framework, looking at daily charts, weekly charts, 240s, 60s, very occasionally 20s, though I don't like them very much. And within that, I'm saying, look at this line, watch this line, see if you get support here, see if that becomes resistance. And then what you can do with your own time frames, in your own time zones, because we've got people from New Zealand to Hawaii who subscribe, and it would be very difficult to be there for all of them all the time. That would be something that you can take your own trades. What I am going to do, though, and what I did last week, was showed actually a recent trade that I took across and how we can use different time frames to look at that, and that's the sterling Kiwi. Let me go up to the daily first of all, have a quick look at the sterling Kiwi. Where are we? There we go. Just give people who don't know the service a little bit of context here. We've got the blue fork is principally what we're looking at. Going back to this A in 2011, B, C there. We've got nice bit of validation across it. Look at this sliding parallel across here. All these resistances across here, pretty much exact. Remember, this is a daily chart, so you know you can give it a little bit of leeway. But what we've been looking at recently on this is of the two highlighted sliding parallels. We've been looking at the resistance across here. We've been looking at the support across here, and these moves have been pretty considerable. I mean, the move from down here in April 92.18 up to anticipated resistance 97.30. That's 500 points. Came all the way back down 92.80. Back up to 97.70, another 500 points. Price fell back a little bit, and we did just push up above the sliding parallel.
Oh.
Benvenuto al webinar. Ci si è collegati con il ruolo di partecipante in grado solo di ascoltare.
Spike above the anticipated level here had just dipped down, and we've got a kind of lowered resistance. That makes me a bit nervous about the support down here. What I did was I went down to the 240-minute chart. So I'm going to go to that at the moment. Just keep this in mind. We've got the second bar here, 93.64. Okay? Going to go down and have a quick look at the sterling Kiwi on the 240. And what I've done here is I've cheated a little bit. I've actually got rid of the bars that were further to the right, really just to show what I've been doing. Again, this is a fork we've been watching for a while. We've got a nice lot of action along the handle of the fork, which shows that we're looking at the right angle. We've got the B, we've got the C, we've got the resistance across there. 1 touch, 2 touch, 3 touch. So we know pretty much that the fork is in control. What happened when we reached the lower parallel? You have a look here, we got a bounce. We then fell very, very strongly underneath it. Look at the strength of that bar to the downside. Pushed up again, and where there was support back here, we started to find resistance. So I know the line is working. I know the angle of the fork is working. What I'm looking now for is support and resistance. Again, we were looking at this sliding parallel here, the Puce one. Support, support. We don't really get up as high as this sliding parallel. Oh, sorry, we don't get as high as prior resistance along the lower parallel here. We've got slightly lower. And again here, slightly lower. We haven't quite reached this blue dotted sliding parallel. Slightly lower. All of a sudden, we dip beneath the Puce line, previous support, but lo and behold, we find support again in the line of the fork, just down here. And I'm going to highlight this sliding parallel. This is what I use to actually get in. I saw one bounce there. First bounce was 93.48, second at 93.55, third one 93.70. That was my entry. I got in there 93.70, put my stop at 93.61, below the previous low. I'm just going to go back to the daily, show you what happened. 93.61, that was my entry there. 10-point stop. Price moves up from 93.60 up to anticipated resistance here, 96.60, 300 odd points. I took half of my trade off there. Second half of my trade was standing here at the quartile. I was still looking at what was happening in terms of the 240. What I'm going to do now is I'm just going to refresh this, just get all the bars back so you can see what's happening. You can see what happened from here. Price went up, started coming back down again. When we didn't gain this sliding parallel properly, the Pew sliding parallel, when we didn't gain that, when we started falling underneath it, I was getting pretty wary. And going back to the daily, when we fell underneath the quartile, 95.20, that's when I took the rest of my trade off. So, okay, it was a daily trade. I didn't get as much as I wanted out of it, but I went from 93.60 to 96.60, 300 points for half the trade, and the rest came out at 95.20. So that is 150 points for the other half of the trade. I hope you can see from that, that is the kind of thing that we are looking to do. It was a very safe entry, and also a pretty safe guaranteed exit as well. When we didn't start pushing higher, when we didn't start approaching this upper parallel, this sliding parallel, maybe the blue sliding parallel up there, okay, looks like we failed, we're going to come back down. What I'm going to do now is see what happens on the retouch of this sliding parallel. The fact that we've got a line of lowered sliding parallel across there makes me think that resistance is lowering from here to here to here. That's going to make me worry a little bit about this lower parallel here, sorry, this sliding parallel support here, to see if that does continue. If it breaches, I'm going to look at this line down here. It's not guaranteed, it's where we had a bounce from once before. I'm going to look at that. If we get a bit of a bounce on it from the first bar, if it comes back down and we get a bounce on the second bar, I might look to go long again. But what I'm going to do is I'm going to go back to something like the 240-minute chart, just to help me get my entries. I hope that makes a little bit of sense. Good. Now, that was basically the sort of thing that I really wanted to try and illustrate. I've had quite a few questions come in. One of them from a member, Anders, who was interested in looking at the Aussie Noki. That's the Australian Norwegian kroner. And what I've done here, I've actually just blanked the chart completely, because I just wanted to show how we can kind of build up an idea of what is going. And if you were looking at this daily chart, I mean, pretty obviously you'd be seeing that there's a bit of a move to the downside, followed by that we've got a bit of a kind of a bottoming, then we're kind of moving a little bit to the upside. I mean, that's the kind of moves we've got. That's pretty clear to anybody. What I want to show is how us, as what I like to call pattern-seeking mammals, I mean, if we can put a framework on something, we can really get a much better idea of what is happening. So what I'm going to do is I'm going to take a fork, and I'm going to go A, B, C, up there. I'm going to change it to a red fork, because that's what I use for down forks. And just all of a sudden, does that make a little bit more sense? I think it does. You can see the down moves that we've got here, the fact that we've got resistance, we fell away from it, we came up, we touched it again, we fell really strongly. I mean, let's have a look at that, just in trading terms. You've got 3 touches here, 3 daily bars, we fall away, we come up, we get another daily bar. That daily bar is at 609.30, that's at 612.70. We fall from 609.20, lower parallel down here, 542.58. Does that make a bit of sense? Just the way that we can follow this. It kind of puts it in context. That's the idea. But that's not the end of it. Anders, I know, has been looking at the move that we've had to the upside, and again, we can follow that by means of a fork. What I seem to remember we were doing in the service, we were watching this sliding parallel across here, that and that, and when that started breaching to the upside, we were really beginning to think, okay, we're beginning to get a move to the upside. So what do? I'm going to go in a little bit tighter again. I'm going to draw another fork. I'm going to draw a fork to the upside. A, B, C. We look at that. I hope that is beginning to make a little bit of sense. Actually, just let me adjust this very slightly. You need to get these pretty precisely. Okay, let me just fill it in a little bit. Now, what are we looking at here? We move up, we get pretty close to the upper parallel here. We fall back down, we fall underneath the lower parallel. In all honesty, we get a little bit of a bounce here, so that would have been quite interesting. We fall, we move up, we start getting resistance in the line of the quartile. 1, 2, 3, 4, 5 touches there. Fall back down. Where do we find support? The lower parallel. When we fall again, having drawn the sliding parallel from there, we get 1 bounce, 2 bounce, 3 bounce from here, and we start to move to the upside. 549.50. Stop under there, 548.70. Remember, it is a daily chart. We move all the way up. We've hit a high at 585.92. In terms of resistance, we're looking at something like this. A little bit higher than, didn't quite hit it there. Another thing we were looking at, let me just fill the chart in a little bit. From that high, we were looking at a horizontal. And this is the kind of thing we were talking about. We were talking about a move from here, pushed up, we found resistance once more. Remember this red upper parallel? Resistance here and here. Find it again. I show it there. But we come back down. Where do we find support? One of the anticipated places would have been the lower parallel. We find support there. We get a really strong reaction from that up. Does that make sense, Anders? I hope that's what you wanted me to have a quick look at. What are we seeing at the moment? We can fill this in a little bit. I mean, if you want to look for further sliding parallels, maybe draw something off those highs there, resistance there. Is that becoming support? You know, we need to clear the horizontal. That's important. If we clear the horizontal, what we're going to do is we're going to start looking at the sliding parallel here, which is resistance back here and here. I hope that makes a bit of sense. Yeah? Okay. I'm still getting an awful lot of questions about actual trades at the moment, even though I'm pretty loath to talk about my precise trades, partly for the reason that I'm not always at my desk for everybody, and what I don't want is people missing trades because I'm not about. But I guess I think most people know I've been looking at the sterling Aussie. Let me just go and move over to that. I'm going to look at, here we go, sterling Aussie 240. Again, this is a really nice fork. It's been working very, very well from this A, B, C back here. The first immediate validation, as you can see, pretty exact, this upper parallel touch. We fall all the way back down. We did actually fall beneath the lower parallel, but I was willing to give it just a little bit of leeway there because of that very exact touch. If we go and have a look a little bit tighter and just have a look at this this bar here. Just look how strong this bar is from this line of support. I mean, what's the low on it? The low is 78.22. The high on it is 79.60. The close on it is 79.55. That is a really strong bar. That gives me a lot of confidence about the fork as well, even though we just push beneath it. So this is something we've been looking at just for a little while, and what we've been talking about for a while is that the resistance along the area of the lower parallel, the median line here, we push just above it. But what I've been talking about is the quartile, the support all the way along here. A couple of bounces just above, a couple of bounces just underneath, but then we start getting pretty exact. 1, 2, 3, 4, 5, 6, 7 really, really, really good bounces here. I don't know, say you... Actually, let me just backtrack slightly. Even though I don't call trades, even though I don't say buy here, sell there, when I'm saying watch a line, keep an eye on this, what I want you to do is have a look and see if support continues along the line. If it does, potentially, depending on your the parameters, your risk parameters and so forth, it's a trade or not. I've been saying watch the quartile. Say you got in here, 80.42, where would your stop be? 80.39, 3 pips? I think I can handle that. Anyway, where's the likely move? The likely move is going to be resistance at the median line. Come back down, up there, 81.70 for 3 pips. 80.42, 81.70. Price comes back down again. If you reloaded, this was the way to go. 80.52, where's your stop? 80.49. Up we go again. Not only at the median line, we shot straight through it. We pushed up all the way as high as this, 83.75. Was this a sliding parallel? Did we know there was going to be resistance there? Not particularly from this chart. It was, I think if anything, we would be looking at the upper parallel. Though in retrospect, seeing this just turn back a little bit, there was always a possibility that it was going to be resistance. And what we can do is just draw the line back from that high. You can see there's an area back here of potential resistance. But the reason, shall we say, that I saw that as a potential high was the 60-minute chart. Yeah, this is it, Sterling Aussie 60. Again, this is a different fork we'd be looking at, A, B, C. And 60-minute chart, you know, you've got to give it just a little bit of leeway, I suppose. We've got this line of support across here. Okay, we dip beneath it just there. But look again, really, really strong bar, back up and through. That kind of tells us that we're getting some support here and we're beginning to move up again. And the reason that I'm talking about this resistance is here. If you look at that sliding parallel, from that high there, very distinct peak there, we can take it all the way across here, in the line of the fork. This is the area we run into resistance. If I remember correctly, I actually got out of the trade along the median line here. That was the kind of level when this median line, which has been resistance here, support there, when that breached, and that is 83.06, I'm going to go back to the 240. Where's that? 83.06. I mean, that's here. That's in the same level as the quartile. That's the area that I got out. So moved up from there, 80.48, we hit 83.75, I got out 83.05. Is that okay? I hope that answers quite a lot of things that some of the guys are talking about. Something just caught my eye. Paul G is asking, how do you follow so many pairs without missing an entry? I won't say I don't miss an entry, but what I do is, I've been doing this for 30 odd years, so I've got a bit of a clue as to maybe what is going on without blowing my own trumpet. But what I do very much is I put out the things that I am looking at every day. And, you know, if you're in New Zealand, if you're in Hawaii, if you're on the East Coast, if you're in Paris, whatever, you do have to do a little bit of work. You have to have a look at these lines, see what is working for you in your time frame, and when you're looking to trade something. I mean, for example, I would hope my members are looking at the Sterling Aussie at the moment, the 240. We've had a little bit of bouncing on the median line. Either they're going to have seen this bounce, pushed up this bounce here. When it came back down, I mean, I would hope some would have maybe got long here in the region of the line, 81.80, maybe with a stop beneath here, 81.73. As price moves up a little bit, I guess they're kind of moving to break even. There is a possibility, should we say, of a sliding parallel happening from that high. There, if we don't get above that, I'd be very nervous. I would ensure that my stop was a break even. Not everything is trending perfectly the whole time. I've got to say that. You know, what I'm trying to do is present just a number of trades, a number of possibilities, and then leave it for you to trade exactly the pairs that you want. I mean, I know some guys, for example, Martin, who's one of our Scandinavian members, I know he particularly likes to look at the Swedish krona crosses. Let me just go to that a sec. Just bear with me. That is on layer 8. Here we go. And this is the Swedish krona against the dollar, just to really show why he tends to watch it. And he's been interested really because of this trend we've been having here, and the way that we breached this upper parallel. Hang on a sec, I am missing a fork. Just give me a sec here. When we get a change of behavior, something breaches to the upside. I know I draw a fork. I know where it's gone. Here we go. A, B, C. That's it, isn't it, Martin? Yeah. Oh, I know where you're looking at it. Yeah, this daily fork, but look, absolutely perfect. We've got no reason to think that this fork is working, but what we're going to be doing is we're going to be watching the median line. And look, we've had a move from here, 632.80 to 688.20. I mean, absolutely perfect, perfect rejection from that. Not much more I can say about that. Anyway, Martin, I know you wanted me to have a look at the Aussie Swedish krona, didn't you? I think you've been following this. Yeah, and again, I mean, this has been mirroring what has been going on in the Swedish krona that we just looked at a moment ago. Just this move above resistance that we've been talking about. So looking at the Aussie Swedish krona, again, we've been watching the fork in the downside resistance here, quartile, down we go in the area, 682 or so, down to support 582, really nice move there. We start to step up a little bit in the fork. Instead of resistance, instead of support along this dotted red line, it comes to the quartile, then up here, and we start moving to the upside. We were watching this this blue fork. I think I drew this in a little while back. I think I was saying last time I looked at it, look at the potential resistance across there. Lo and behold, bit of resistance, we fall back, we come back down, and we now found support on top of it, and we started to move up to the upside. Now the resistance that I'm seeing on the quartile, I think, Martin, if you're watching this, just keep an eye on that quartile resistance there. Is it now going to become support across here? Is that move going to continue to the upside? And he also wanted me to look at Swissy Swedish krona. Oh yeah, again, I remember this one. Again, we've been talking about the support across there. I think all the way there with seen once, a little bit of a dip down. Where does it dip to? Lower parallel, once, twice, 3 times, 4 times there. Up we go again. This was the line of resistance we were talking about. Once, twice. Okay, we had a spike. People will give me that one. But look, resistance there. We seem to be coming back down from this area of resistance with dipping. What am I going to look at now? I'm going to look at the median line to see if that provides us with a little bit of support. If that is the case, prior resistance, prior support along the median line stepping up, that would put this sliding parallel resistance under a bit of pressure. Steps me up as support, puts our line of resistance under a bit of pressure. Is that okay for you, Martin? Yeah? Great. Grant, I don't know you. No problem. Just got a question coming through from Grant. Swissy Noki. I've got Swissy Noki. Where have I got that? Layer 9. Hang on a second, if I'm right. Yeah. Okay. That's the Noki against the dollar. We're in uptrend. A little bit of lower parallel support. Had a bit of a dip. Found support again. Just running into a bit of horizontal resistance at the moment. Also, just keep an eye on the quartile there. Just running into a bit of resistance. Let me have a look at the Swissy Noki. See what we've got. Yeah, that's running quite nicely, isn't it? I've got to say I haven't looked at this for a while, but there's some very nice lower parallel support there. I mean, if you take an entry 663, your stop would have been under 662. I guess that's not really too far in the Noki. We've pushed up. What would I be looking at the moment? See if we can get above the median line. Hang on. Let me just expand this a little bit. See if we can gain the median line. Median line was resistance there, it was support back here. It's obviously an important line. I'd like to see support above, what should we call it, 91.20, see if the price moves to the upside from there. If it falls a little bit from there, maybe take, I don't know, something off that low there, sliding parallel off that low, bit of support there. Oh, there we go. Support there, a few bars happening there. I just keep an eye on that maybe, beneath 688.25. See if anything happens on that. Does that make a bit of sense? Great. Grant, I hope you got in here. Nice trade if you did. Also, just another thing I'm noticing, a little bit of horizontal action maybe. Just keep an eye across there as well. Touch, spike above, and down we go. And how many times do we see that? Little spike above, and then down again. Just be a little bit careful as a result of that bar. Very, very strong bar. I'm just noticing that. Close right at the bottom, spike down from that. Just be a little bit careful. Okay, price does move down a little bit more from there. I'll be watching, as I say, the sliding parallel. You could also maybe just draw something off that sliding parallel, see if that does anything. Beneath that, the quartile, resistance, look to see if that becomes support. And then obviously if it falls a little bit more, keep an eye on the lower parallel down here. Great. I'm just going to, I've got one more. I promised Mario I would have a quick look at the Kiwi Swissy as well. Let me just go and have a look at that. That's on the daily. You wanted to have a look at it, didn't you, Mario? Kiwi Swissy, yeah? Okay. Right, this actually is a really nice chart because what it shows is stepping down. What it shows is that resistance is lowering in terms of the fork, but we're still using the fork to follow what is going on. And we go back to 2009, ABC, you can see we had really nice, sorry, let me just get in here, resistance, resistance, resistance. We were watching the support along the quartile here. I remember pointing out the little gap, the fact that we didn't quite hit the median line like we did here. We didn't quite hit it there. We're only sort of 30 points shy or so from it, but that was the tell. We fell, instead of finding support at the quartile, just a bit underneath. We started getting a little bit nervous. The resistance, it moved down from the median line. It's this sliding parallel across here. There you go. We start drifting lower and lower and lower. Currently, we're watching the sliding parallel. Support, support, support. I say this is support because just look at the close. Bit of a spike down, but we closed well above it. Really strong bar. Support here, then it becomes resistance. Gets a bit fuzzy, then resistance here, resistance, and then we've had about a dozen bars of resistance across here. That's the line we're watching to see if we can push above it. If we do push above it, what I want to see, the price come on above it, come back down, find support on it, and that is going to be a bullish sign. We start dropping away. A few areas I'm going to look for support. One is the median line, one is this sliding parallel here, and then thirdly, the last line in the sand is down here, this sliding parallel here, around about 75.90. And you also wanted me to have a quick look at the 240. Okay, let's have a quick look at that. Kiwi Swissy, there we go, on the 240. Okay, and this fork, just to explain to people, goes back to late 2013, ABC. I'm not going to go through all the supports and resistances, but you can see resistance at the upper parallel, support there, up we go. The lines we're watching at the moment, sliding parallel support here, we stepped up to there. We've been watching this resistance across here for quite a while. We just started to poke above it. Can you see those lines just poking above it? Then we poke a little bit higher above it, a little bit higher above it. We've got a brand new sliding parallel running across there. That one, and we're going to look to see what happens. We're going to look to see if we can keep matching that. What I would like to see in terms of bullish is if we can get above this sliding parallel that was resistance back here. That would be potentially bullish, and we can start thinking about a further move to the upside. Is that okay? Yeah? Great. Guys, I'm running out of steam a bit. I have been going solidly for 45 minutes. Just give me a sec to have a slurp of water. Hang on a sec. Okay, I'm back with you. Sorry about that. As I say, I'm running out of steam a little bit. I'm not quite as good as Paul at these webinars. I don't do them every week. I hope that has been helpful. I hope that's given you a bit of an idea of what we're looking at. I hope that I've shown the kind of moves that we can see in these cross pairs. I mean, they really do move, a dramatic distance. We sort of go back and look at this CAD Swissy that I've been looking at. I showed you that on the weekly. Showed all these moves down from here to here. I mean, 95 down to 78. Then I've been tracking this 240 up all the way going back to February. If we go and have a look at the CAD Swissy on the 240, this goes back to February, March. We've been tracking this move up. Hopefully, I'm showing the kind of moves that we're seeing. Down here we've got 78. Up here we've got 84. That 600 points, that's a really big move in CAD Swissy. It's 0.84, so that is really a strong move. I hope I'm showing the kind of moves that we're seeing. I hope I've shown the way that we can map them, the methodology that we're using. As I've said, they are seriously underanalyzed. People out there are not looking at these charts. They're not looking at these cross pairs so much, and they do show great harmony if you do apply the appropriate techniques. And once more, I just want to stress that what I do, the cross pair service, is not a trading service, in that I don't hang around saying buy here, sell there. What I do is I say watch this line. CAD Swissy this morning I was saying, watch the green line, see if we get support there. You know, hopefully some of the guys and girls have got in on this. I would have thought, you know, by now, unless we can clear the quartile, get above it, find support on it, you know, your stop hopefully is now going to be to entry. You've got nothing to lose. It's the market's money. If we start pushing to the upside, hopefully there's money to be made. What I am trying to do, and I hope again made it clear, I'm trying to produce a framework using the pitchforks, using the lines, the supports and the resistances, those that can really give us a really high probability of support and resistance across the various time frames. Now, for those of you that members, not members of Coglan Capital, if you're interested at all, what we are going to do is make a little bit of an introductory offer service. If you want to find out a bit more about it, you can email me, ben@coglancapital.com. But we've also got just a promo for those of you that are interested. For the first month, what we're going to do is we're going to make an offer. We're going to take $40 off the usual price. The usual price being $89.95. So for the first month, $49.95. If you are interested, if you want to try and follow the service, and if you want to find out a little bit more about it. What I'm going to do is I'm actually going to move over that onto the line. There you go. If you follow that address, www.coglancapital.com promo, or you can email me, ben@coglancapital.com, if you have any further queries, and hopefully that is going to be of interest. What we're also going to do is we're going to send an email to you with a link to the recording that we've been making of this webinar, so maybe you can have a look at it a little bit more leisure. I do appreciate I've been going through things pretty quickly, but I hope you appreciate that obviously I've got members here that I'm looking to provide a service to, and also to introduce other people to the service as well. Anyway, for those of you that aren't members, I hope I might have stirred a little bit of interest in the methodology that we use and the way that we can apply it to the cross pairs, and hopefully you've seen that it can be done in a profitable fashion. Anyway, I am going to leave it there. I hope I've answered a number of the questions. I do appreciate there are some others which are not there, which I haven't been able to answer in the time, but please feel free to email me if you want. As I said, ben@coglancapital.com. Thanks very much for your attendance, and I hope it has been of interest to you.